the Q3 2015 Cushman Wakefield Marketbeat video. In the Ho Chi Minh City office market, no new office buildings in the Grade A and B segment entered the market in Q3 2015. However, significant leasing activity was recorded in the three yet-to-be-launched buildings, namely Vietcom Bank Tower, Lim Tower 2 and Pearl Plaza. Occupancy of both grades continued to increase this quarter. The average occupancy of Grade B buildings in the non-CBD remained slightly higher than those in the CBD over the last 5 quarters, as tenants remained attracted to the lower rents on offer here. Grade A net absorption for the quarter was 2,000 square metres and Grade B was 3,800, all from buildings in the non-CBD area. The three aforementioned towers will be completed in Q4 2015, bringing 80,000 square metres of space. Most of this space has been pre-let, however, suggesting that there will be upwards pressure on rental levels in 2016, after the initial drop in Grade A rents is absorbed in Q4. This is due to VCB, or Vietcom Bank Tower, offering space at a level slightly below the Grade A headline. In Hanoi, there was also no new supply entering the market over the previous quarter. Both grades witnessed significant improvement in market performance, with average occupancy rate of Grade A increasing to 83%, and Grade B stood at 87%, which was a 16% year-on-year improvement. In the last quarter of 2015, 1 Grade A and 6 Grade B buildings are expected to enter the market, providing an additional 180,000 square metres of office space to the market. The office market will continue to face an oversupply situation over the year due to the significant number of office projects currently in the fitting out stage, especially in the western parts of the city. Therefore, rental declines are expected to continue unless demand increases significantly. So in the Ho Chi Minh City apartment for sale market, there was substantial new supply across all grades launched during the quarter, with 4,600 units from 14 new projects and a further 4,000 units from 12 active projects. As of the end of the quarter, there are over 20,000 available units across all grades in the primary market, with more than 50% of this located in districts 2, 7 and Binh Tan. The residential market continued to see consecutive increases in transaction volumes in the quarter. We registered an 185% year-on-year increase. Price levels of all grades recorded an upward trend in Ho Chi Minh in Q3. And looking forward, apartments with small sizes will continue to be the most sought after. Future supply will largely be in strategic locations, which offer easy access to CBD, such as districts 2, 4 and 7. And projects located along the first metro line are attracting a lot more attention from investors. And the new housing law is expected to strengthen demand, especially for the mid to high end projects. But oversupply could be an issue in these segments in 2016 if the new units continue to be launched. The city's residential market is expected to remain strong in the short term, however. In the Hanoi apartment for sale market, Q3 2015 also witnessed very positive market momentum, with strong launch activities across all grades, especially grades B and C. Approximately 8,700 units from 23 projects were launched, of which 2 were new Grade B projects. The rest were from active Grade B and C projects. The total primary supply in the quarter was more than 16,000 units. Transactional volumes also up a massive 263% year-on-year. Several Grade B projects registered impressive sales rates, including Time City Phase 2, Imperial Gardens and Golmark City. Hong Mai district contributed the highest share of total sale volume in this quarter, accounting for 30%. Price levels of all grades recorded a slight downward trend in Q3 2015 as competition between schemes continues. Looking forward, low-end apartments will continue to be the most sought after, and this market sector is expected to be the most active going forward. The new housing law again is expected to strengthen demand, especially for the mid to high-end projects. New guarantees required by developers, obviously, from banks for new developments will add more confidence to the market. And we expect this residential market to continue to improve in the short to medium term. In the Ho Chi Minh City retail market, 2 retail centres were completed in Q3 2015. The renovation of Tan An Dong, or former Hung Vung Square, was also completed. Currently, there are 119 retail centres in the city, with a total area of approximately 960,000 square metres. District 1 remains the most concentrated retail market in the city and accounts for about 20% of total supply. Conditions continue to improve gradually. the two aforementioned new completions were reportedly fully occupied. The recent trend of high-profile investments from foreign retailing giants into the non-CBD area continues, establishing large shopping centres and offering very aggressive rents, and this raised occupancy rates to 93%. The CBD remains stable at 90%. Average rents continue to trend downwards due to lower rents in new projects and the closing of some retail properties where rents were higher. Rents in the CBD, however, did remain stable. Over 200,000 square metres of new supply is expected in early 2016, so demand for CBD space will remain high due to the limited land. So large-scale future stock will be located in non-CBD areas, mostly in the south and the east, where much of the infrastructure and residential development have been established. Okay, on to the Hanoi retail market, where 2 new retail centres were completed in Q3 2015. This added about 21,000 square metres of space to the market. However, some projects were also restructured into offices due to poor performance. Total supply stands at around 716,000 square metres. Non-CBD supply dominated the market and accounts for nearly 96% of the market due to the limited land bank in the CBD. Positive signs were recorded in Q3. The improving performance of shopping centres and retail podiums offset the ineffective operation of department stores, leading to an improvement in the average market occupancy to about 85%. The average rent in the CBD remained stable over the quarter, as the majority of retail centres in the CBD are fully occupied. Non-CBD areas showed a small increase in rents. 2 notable projects, Vincom Windy Tan and Aeon Mall in Long Bien, are expected to enter the market this year and will provide more than 165,000 square metres of new retail space to this market. Looking forward, easing tariffs under the Trans-Pacific Partnership, together with the further liberalisation of the retail sector under the provisions of the World Trade Organization, is expected to enhance Vietnam's potential to international retailers. In other news, the merger of Cushman Wakefield and DTZ has completed and has formed a new global power in the real estate services business. Okay, thank you for watching.